The demand is just not there. And the slowdown in China, it's hitting all of these companies majorly, particularly the German automakers.
And it's not just robo-taxis on the end, it's the whole application of AI in the car, right? From how you use that for in-cabin sensing to the car driving itself.
Listen, rather than putting more incentive on their F-150 Lightning or their Mach-E, let's give the customer a free charging infrastructure for their home.
How long have you owned General Motors before last week?
Too long.
How long?
Over 5 years.
Over 5 years?
It's been a horrible investment.
Interestingly, I want to mention this, the Cybertruck. 5,000 sales in July alone.
All that and more. So let's get to it. Tesla stock is up in the pre-market just a little bit, currently sitting at $262.17. It's October now, but I can't help but wonder if TSLA will have similar success like they did in September, up over 20% for the month. I wonder how everybody else in the auto industry is doing.
You got Volkswagen, Stellantis cutting their profit outlook. Stellantis shares hitting their lowest level since October 2022. Oliver Crook is tracking this story. Ollie, good to see you this morning. I mean, you just think of some of the Stellantis brands here, Ram, Dodge, Jeep. This is about a company going from cash generation to cash negative. What is the headwind?
Yeah, absolutely, Manus. And it's not the only one. I mean, this has been an absolutely brutal month for the automakers, as we've been reporting. I mean, these are all the companies that have cut their outlooks just in the month of September. In fact, the graphic isn't even big enough to get them all on there. We had Aston Martin coming out today as well. And there are a couple of idiosyncratic stories attached to some of these, right? BMW has that big recall. Stellantis, as you're mentioning, they're struggling with Dodge and Jeep sales, so they're trying to gas that up by spending a little bit of money. But overall, the picture doesn't change that much, and it's a question of demand. The demand is just not there. And the slowdown in China, it's hitting all of these companies majorly, particularly the German automakers. When you look at how much they've been hit just today in this session, I mean, Stellantis is down 13%, Volkswagen down 3%, Aston Martin down, losing almost a fifth of its value today, which is really remarkable because when you switch the board and you look at the year-to-date move, there is already a huge amount of bad news priced into this sector. I mean, Stellantis has already lost 40% there. We're really coming at a key moment for the auto industry, as we've been talking about, and really investors seemingly not very forgiving about it, even if with all of this bad news already priced in.
Well, this isn't a surprise to me. Probably not you. Considering how far Europe is along in the EV transition, a lot of these automakers are going to experience this firsthand. A little bit of foreshadowing for the other legacy auto manufacturers around the world. Toyota, GM, Ford. But it's tough to feel sorry for these guys, considering that they seen what Tesla could do in 2014. The writing was on the wall, yet they chose to bury their heads in the sand. But I suppose you reap what you sow.
We've seen this wave of weak guidance charting a rough road ahead for auto stocks. Stellantis, the latest company slashing its outlook. And I'm curious, and we've been trying to sort of get our arms around what is happening in the auto industry, particularly when you look at North America versus Europe. Stellantis, obviously, you know, kind of straddles the two regions. How are you viewing the differing challenges here?
I think the U.S. market has been on a path of mean reversion. Remember how car prices shot up during the pandemic, and it's been coming down ever since. I think the U.S. specifically for Stellantis has seen a situation where Stellantis took prices up far faster than GM and Ford have over the past couple of years, and the product quality really didn't catch up. And that's one part we're seeing right now. In addition to the inventory Prav just mentioned, there is a price correction required here. In Europe, I think we're seeing a more general slowdown of the economy, but nothing like the kind of mean reversion we are seeing in the US for Stellantis. So Europe, while not great, is still on a fairly decent path. And if you look at the guidance that the company gave today, what it actually implies for the second half is that in North America, Stellantis will not earn any money. So margins likely dropping almost to 0% for the North American business in the second half.
Ooh, what? Not make any money? Alarm bells should be ringing. Can you imagine not making any money as an established legacy auto manufacturer? Don't worry, Stellantis, you will not be alone.
Daniel, sometimes you'll see this commentary, kind of a broader question for you, where folks will say that they steer clear of Ford and GM because they don't think those names ultimately long-term are positioned to capitalize on where the industry is really headed, software, autonomy. What's your take on that?
Well, it's a fair argument. The big discussion, if you talk to long-term investors about the Detroit 3, clearly is the terminal value and how much of that terminal value is real. And look, auto stocks, difficult on a 10-year period. I would strongly, our recommendation has always been, look, you want to look at these companies on a kind of 6 to 18, maybe 24-month basis. That's how you need to phrase the investment thesis. If you think about those three challenges, I can only underscore that, right? Traditional automakers need to transform their production from combustion engine drivetrains to electric. And we can argue about the pace, right? It's a little bit slowing down maybe, but the ultimate goal is the same. At the same point, they really need to increase their value chain and their capabilities on software. And I'd even add, it's not just robo-taxis on the end, it's the whole application of AI in the car, right? From how you use that for in-cabin sensing to the car driving itself.
That's kind of easier said than done. I mean, that's not what they've been doing for the past century. But imagine if you were making phones and cameras before the year 2000, and someone came along and told you, hey man, you're probably doing this backwards. You're gonna have to adapt and change. This thing doesn't even get the internet. Or, you know what's better than digital cameras? Nothing, especially not film. But saying things to those companies back then, like you would the legacy auto manufacturers now, those companies would just look at you like you got a dick going at your forehead. Even if those companies could do what you're asking them to do, they're going to do it pretty poorly. And then the consumer, no matter how dumb they might be, would still know the difference between that and a Tesla.
Speaking of, the fact that Ford is set to offer free chargers to EV buyers through year end. What does that signal?
Hey, you do what you gotta do. To me, it smacks of desperation, but somebody's gonna want it.
Listen, rather than putting more incentive on their F-150 Lightning or their Mach-E, let's give the customer a free charging infrastructure for their home where they may see that as a better value. But the bottom line is, the OEMs have to incentivize the markets or they have to cut production.
How long have you owned General Motors before last week?
Too long.
How long?
Over 5 years.
Over 5 years?
It's been a horrible investment.
God damn, 5 years? Just imagine if instead of GM, he invested in Tesla over that same time period. I think he'd be singing a different tune.
So, well, what made you finally sell it?
When it was 48,
you sold it last week.
I did sell it last week. $48. When you look at what's happening, I mean, I didn't know what was going to happen today, given Stellantis and all the others, but the consumer's slowing. You've got a huge amount of supply of autos. It's not just GM, it's Ford, it's everybody else is coming there. I just think you've got peak earnings there, and they're reinvesting so much money into products we don't know if they have a return on investment. So I made money this year. I lost overall to the market, but I'm kind of taking my, taking the money off the table and saying, hey, I really don't want to see the stock round trip in the 20s and 30s again.
The judgment day for Tesla for the third quarter coming up here. What can we anticipate, and what are your sources telling you about the news we might be getting in?
Well, like what Dan was saying, fundamentals are improving stability there on that overall business. You mentioned that 461,000 deliveries in Q3, up sequentially from Q2, which is actually a big change. People were afraid that, like you mentioned, that sales would actually go down and be less compared to 2023, but it might be the case. It might match that level. What's going on here? China seems to be on a roll, which is surprising given what we're hearing. What's happening, big picture in that country, but Tesla EVs are selling well, and registration data proves that point. The U.S. also doing quite well here for Tesla. Price cuts maybe in the rear view mirror here. Even Dan and I was talking about how we might see a trough in that profit and that margin story finally, with people actually sort of going back to the stores and buying these cars, and maybe that affordability mix is finally there. Interestingly, I want to mention the Cybertruck. 5,000 sales in July alone, tracking around 17,500 in
Is that
year
good?
to date.
You're saying
that's
that like
not nothing. That's not nothing. I mean, if you can hit 5,000 to 10,000 a month going forward, that's not nothing in the U.S. And then eventually go to Canada and places like that. I'm not saying it's the main driver, but it's something that can add to the additive story of where Tesla is.
Just being able to get the Cybertruck out into the wild, it's such a standout vehicle. Who makes that? Tesla? what else do they make? You know what I mean? You gotta remember that they just started producing these things and they're ramping up to volume production. As they iron out all of these production kinks, the demand for the Cybertruck isn't waning. Probably still on track to open up a more affordable version of the Cybertruck in Q1 of 2025. You know, to open up a little bit more of that total addressable market. With these things, they're practically selling at $100,000 a pop. Like Pras said, it ain't nothing.
You know, Pras, talking about the story of where Tesla is, right? I think a lot of investors are trying to figure out how important these delivery numbers are and how much is ultimately going to matter when there's so much emphasis placed on the robotaxi event that we're going to be getting later on in October, I guess only a few days after we get these results. What are you hearing from analysts just in terms of what matters more, maybe ultimately what that tells us about the direction of the stock and whether or not we can keep this momentum going?
Yeah, I mean, I think that big story is going to be next week when we have that 1010 robotaxi event. That's the big play here. You know, Adam Jonas wrote a note about how he thinks that the actual Tesla vehicle business is basically break even at this point, given all the costs that are involved. And it's all about that future outlook, AI, robotaxis, the deep commitment to supercomputers and all that stuff happening with Dojo. So that's sort of the big story here. I think a lot of people are sort of waiting with bated breath as to what's going to happen next week. Are we going to see not just a robotaxi that's a prototype, but are we going to hear plans about, are they going to start doing geofenced testing? Are we going to see other products based on the robotaxi, a smaller EV? That's sort of the kind of the promise or the sort of expectation for the bulls here right now for Tesla.
Don't get it twisted. The delivery numbers, they are important. But what's more important is to see where Tesla's going to go in the future. The margins for the robotaxi are going to be astronomical. How fast they're able to manufacture this vehicle will be paramount to the Tesla story.
I mean, deliveries this week, but then the robotaxi day the week after. And I do wonder how much of this is optimism and excitement over that and starting to price in what that might look like.
Yeah, that's fair, right? And the stock has run quite a bit. It's run, past my price target as well, notably. So sure, folks are looking at optimistically on robotaxi and what that could mean. But that said, in the backdrop of what's happening in overall autos, I still think it makes sense to still be constructive there. And recall what's happening in Europe, for example. Next year, that regulatory cliff, guess who these OEMs in Europe are going to be buying credits from? Tesla. What? So I think a lot of folks look past where the price is, the share price is, and looking more towards sentiment and the narrative. The narrative is autonomy. Sentiment is numbers beating. These regulatory credits are going to be pretty big. Then you have energy storage. Deliveries look like they're going to be fine. So on a sentiment basis, which is, I think, how this stock trades, I acknowledge it could be a sell the news type event, robotaxi, but the day. But I do think there's enough inertia now, given how the rest of autos is trading, that it could still catch some support.
Woo, if it's sell the news, your boy will be pulling the trigger quite often on TSLA. Everyone else is drowning, looking for the life preserver, sending out signals that we may need a bailout or two. It'll be interesting to see how the EU handles some of these floundering legacy OEMs. But I'm gonna tell you like this, over here in the US, GM, Ford, even you, Stellantis, you've had plenty of time. Don't be asking for no bailout. Get your together.
Is a return to the highs on Tesla anywhere in your modeling right now?
Yeah, I mean, look, my modeling is very conservative. I don't include any optimists, which is, by the way, coming up a lot in questions. Folks are starting to look at that. My robotaxi numbers, I think, are quite conservative, $400 billion of value. I think this could expand autos well beyond the $2.7 trillion level. So the upside is significantly higher than where my price target is. And definitely you could make a case, obviously, for where the stock is trading. But again, I don't think folks are doing the math on DCFs on this name, right? They're looking at catalysts near term, and there are several. And I do think folks will continue to be excited on the back of the robotaxi event.
In conclusion, when I bought my first Tesla, I was like, this is the only thing I'm ever going to buy again. Especially when I compared it to everything else on the market that the legacy auto manufacturers had to offer. Now they have these EVs. that are pretty much facsimiles of what they've always put out before, just with a different powertrain. Being inside a Tesla, you could tell that they built these things from the ground up. What does an electric vehicle need versus that of an internal combustion engine? Whereas the legacy auto manufacturers are like, they look the same. They've got doors, windows, and tires. Let's just slap a battery underneath it and hope our brand carries the consumer into this new age of EVs. Oh, that's not working? The hybrids. We can do both, right? Convince the consumer that we need both hybrid and electric. And for the moment, that seems to be making them some money for now. But as I said before, the hybrid vehicle is merely a stepping stone for a pure electric vehicle. And once you've walked the path of a plug-in hybrid, you're going to want the best battery electric vehicle on the market. And without a shadow of a doubt, that's going to be a Tesla. What's happening over there to the European legacy auto manufacturers will in turn happen to those here in America, in Japan. And I'm gonna tell you right now, folks, that train wreck, that's not gonna be a pretty sight to see. On the other hand, Tesla's fundamentals in the automotive side are starting to be restored. Not to mention, they haven't been standing still. Their goal to disrupt themselves is pacing them further ahead. Those that some would call their competition. It's not Tesla versus the rest of the auto industry. It's Tesla versus Tesla. Because once you've stopped adapting, innovating, that's when you start to die. Because if you don't disrupt yourself, someone else will be glad to do it for you. Regardless of what happens on 1010, that will be the mantra. Tesla is consistently trying to disrupt itself. Tesla's ability to pivot to what they figured would be more important, the autonomy of driving, was not a popular decision. But in case you haven't noticed, folks, Tesla's not in it for the likes. Should we do it? Can we do it? We will do it. And once Tesla decides to do something, you can guarantee that there'll be no one else that can do it quite like they can. That's all I've got for you today. Be easy. Peace.